Hello, welcome to Noble Tutorial. In particular, welcome to this session where we are going to see an example on the preparation of a trading account. Remember, in our previous session, we talked about the format of a trading account, but now we want us to see practically how to prepare a trading account given a particular information from any financial business anywhere. There is one thing I request you, please, wherever you see these videos, don't forget to subscribe, don't forget to like, don't forget to share with those other people that may need this information, please. Thank you. Now, purposely, for today, we are going to look at an example from a given information of a certain entrepreneur. Look at an example of this format. The following information was extracted from the books of accounts of Noble DeWine Limited. When you look at this information, it is just information we got from Noble's business, and we want to see if this information is given to us, can we finally find the gross profit using the given information? Now, the sales, these are units, and in particular I'm opting for shillings. Let me assume these were 2 million. Purchases, 500,000. Returns inwards, 60,000. Returns outwards, 20,000. Opening stock, 200,000 opening stock. Closing stock, 100,000. And finally, wages, 25,000. With this information, any person conversant with a trading account can easily find out what amount of gross profit or gross loss, because it may be a profit, it may be a loss. Such things happen in business. So we want to see, with this information, can we find out whether Noble DeWine Limited made a profit or a loss? Financial statements, particularly an income statement, in particular now the first part of an income statement called a trading account, they must have 3 lines of the heading. The first line is always the business name. In this sense, we have Noble DeWine Limited. The second line is always the account name. We are talking about a trading account. So, and the last line of the 3 lines of the title is supposed to be the time frame or the period. When you look at it, now this space may not be so adequate for writing both the heading and the account itself. What I'm going to do, let's first see how the heading will look like. Then, after the heading, we have the account made from up. This should be Noble DeWine Limited's trading account for the year ended 31st December 2019. When you look at this heading, the first line is the line describing the business name. The second line is the line describing the account name, in particular the trading account. The third line is a line indicating the period in which all these operations appeared. So this will be your heading. When you write in uppercase like I've done, in capital letters, please don't underline. When you present your heading in lowercase, please underline each one of them. But for this particular case, you put a straight line in the last statement, then you make our trading account. So I'm assuming that every person has seen and understood how the heading of a trading account is written. So I'm rubbing off this to have the trading account put in place. From our previous session, you saw that this one is the format of a trading account with the columns, this one entertaining the particulars, otherwise the details of the business given us are put in the first column. The second, third, and the fourth columns are always amounts column, just amounts column. So here we have the units, we chose shillings, units. Now, it is paramount, it is a must, it is compulsory, it is not optional wherever you prepare final accounts or financial statements to include the units in which you are writing these figures. If they are dollars, do the needful. If they are shillings, do the needful. If they are pounds, well and good. So make sure that you have the units put in place very clearly. When you look at the information, remember the format of a trading account. We say we are particularly looking for the gross profit. And we say gross profit is the net sales minus the cost of sales. And this is what we need, sincerely speaking. This is a trading account. What you see here is indirectly a trading account because you're going to find the net sales from inside there. Then we don't indicate negatives and positives in the final statements or financial accounts. We instead use the word less to mean negative and add to mean positive. So when you look at this information, we have the sales. The sales are worth 2 million shillings. So you put the amount in the second amounts column. It is not a joke. When you see me separating the figures, it is paramount as well. Just like you go to financial institutions and want to deposit or withdraw any amount of money, you normally space these figures very well. Don't write figures that cannot just or easily be read by any person analyzing your books of accounts. So the 2 millions less. The word less is meaning subtract. The two returns inwards. Return inwards. Sorry. You less returns inwards. So remember when we are doing the format, we say net sales is equivalent to sales or total sales minus returns inwards. This formula is what I'm putting in a table. So replacing this negative with the word less, and we are going to get the net sales because we have the total sales here. We have the less, the negative, and we have the return inwards given to us as 60,000. So when you get the difference between the two, what you get is what they call net sales. So net sales is equivalent to 2 million. We are subtracting off 60,000, making it 1,400,000. And that is the net sales. In that sense, sorry, when you look at 2 million minus 60,000 is 1,940,000. Sorry, 1,940,000. If you look at this figure very clearly, it is the figure someone would have gotten after writing this. When you write this, you say total sales minus return inwards, you get net sales. That's exactly what I've done in a table. After doing that, we say gross profit is our target. So we have net sales minus, which is less, cost of sales. So what do? We subtract less cost of sales. Remember, cost of sales has its own formula. If you can remember very well, we say cost of sales is equivalent to opening stock plus net purchases minus the closing stock. If you have this, we have the opening stock given us, we have the net purchases not given us, but we have to remember purchases and returns outwards, then we have wages. So we can easily get the net purchases so that we respect the formula for cost of sales. Cost of sales is equivalent to opening stock, which is opening stock. Yes, this noble guy had opening stock of 200,000. Now, we say plus net purchases. However, the net purchases, we know that net purchases are equivalent to total purchases minus returns outwards. Of the total purchases, if you can remember, we say we have purchases themselves, we add them carriage inward, the transport you incur, then the wages, that payment you make for the piece of work done as you're moving these items to your destination of the business. So in that sense, we get the total purchases. Here we have the purchases and we have wages. Take a note of this. If wages are given independently, we said wages are added on purchases to get the total purchases. However, if you have wages and the salaries in one statement, that one is an expense. Is not treated the way we treat wages alone. So wages, 25,000. So we said add purchases. Purchases, we have 500,000. Then we add on wages because we are looking for the total purchases. So this wages is very important. So we add on wages. What we need in adding person wages is getting the total purchases now. Wages is 25,000. So after writing this, we have now the total purchases. Total purchases, we have 500,000 plus 25,000, so we have 525,000 as our total purchases now. We want to get the net purchases. Net purchases, remember we say, the items that the business actually has after making the return outwards of the business. Since we had made some returns to where we had bought these items, so we get the return outwards, subtract them from the total purchases to have the net purchases at hand. Hope we're moving together now. So when you have this, we less returns outwards. Returns outwards is 20,000. So it is 20,000. Since this 20,000, we have finally the net purchases. Net purchases. We have 525,000, we are deducting off 20,000. So we have 505,000 remaining. After realizing that net purchases are 505,000 remaining, get this amount and write it in the second amounts column. Why? This amount put here, you will be having a direct connection of opening stock plus net purchases. You see, we shall be moving to the formula of cost of sales. So what you do, you write this figure in the second amounts column. Is 505,000. So you have 200,000 as opening stock. You have 505,000 as the net purchases. Now we have this negative here, which means less the closing stock. Closing stock. When you get closing stock subtracted from this, so let's closing stock, we shall have the amount of closing stock is 100,000. Closing stock 100,000. As if you have 505,000 and you have now 100,000 subtracted from it, you actually remain with a value called cost of sales. Remember, cost of sales is opening stock plus net purchases, which is this. Then minus the closing stock, which closing stock now is this. So this addition of the two and subtraction of this gives you what they call, or what we call, the cost of sales. Somebody may wonder that one time you say opening stock plus net purchases, you get what they call goods available for sale. It is very true. When you get opening stock and net purchases added together, you get what they call goods available for sale. If I provide a formula like goods available for sale, this place may be a bit not enough, but let me try and see. Let me try to fix it and see whether it will fit there. When you get this opening stock plus net purchases, the value that you get after adding the two is the goods available for sale. That is the amount. Now, it is the goods available for sale on which we subtract this. Why have I done it just like this? Adding and subtracting at the same time because of space. But let me separate it very clearly, such that I may be not confused your point. So the addition of the two opening stock and net purchases give us goods available for sale. And this one is 200,000 added on 500,000, you end up getting 705,000. This one is the goods available, the sum of opening and closing, and net purchases. Now, when you less closing stock, now the sum of these two is goods available for sale. Now, you subtract off the closing stock. When you put off closing stock, it is 100,000. The figure you get after subtracting becomes cost of sales. Cost of sales. This cost of sales is normally written in the last amounts column. Why? For smart and clear calculations, when you have net sales, subtract off cost of sales, you directly get the gross profit in that sense. So we write the figure in the last amounts column, which is 705. Subtract off 100,000, and someone gets, yes? What have you gotten as your subtracting? Okay, 605,000. 605,000. That's the amount. After getting the cost of sales amount, we can now practically say we've fulfilled this formula of the trading account, where we say gross profit is equivalent to net sales minus cost of sales. Net sales minus cost of sales. What you get is gross profit. So when you see 1 million 940,000. It is 1,940,000. When you subtract off 605,000, this will be a 0, a 0, a 0. This one becomes 10 minus this, becomes a 5. This one remains a 3. Hope you follow, and every person is okay. This is 10. When you have 3 minus 0, you get a 3. 9 minus 6, you get a 3, and you have a 1 million. So 1,335,000. So you get 1,335,000. After getting that, you call it a trading account with that figure written lastly as gross profit. The figure we've written last here becomes the gross profit. The cost of sales is this figure that we are having here. Now, here comes a question. What if someone has been calculating and you find out that net sales are far less than the cost of sales? Say this figure was here and this one was here, you get a negative figure. It is very possible in business. We make losses sometimes, though sometimes we make profits, and it's our major target in business always. When such happens, you have greater net sales as greater cost of sales than net sales, you get a negative figure. We don't write negative figures inside here. No. What you do, you include brackets. Whenever you look at those brackets, the figures put in brackets, it implies these figures are deficits, they are negatives, they are losses. So, had it been, hope this one has sunk in your mind, I want to do something different, but using the same account. Let me assure you, this amount is here and this one is there. If I make that assumption, this figure will be negative. If it is negative, you can set gross profit and you put that figure in brackets. I repeat, if this amount was up and the amount up is down here, it is practically possible that you're going to get a negative gross profit. So practically it will give you a gross loss. If you had not written gross loss because you didn't know and you have written just gross profit, don't mind. It's okay. What you do, write the figure here, put it in brackets, leave the word gross profit here. If you realize that it is a loss, but you have not written anything here, say gross loss and don't put a bracket on this. Because when you say gross loss, you have to tell us that this one is a negative. So don't put a bracket anywhere when you say gross loss. When you say gross profit and this one is negative, please put it in brackets. In the next session, we shall see a profit and loss account. It's a format and an example. And after that, we shall have an income statement prepared at once, and we'll see other things like a balance sheet and ratios. For today, and for this very session, allow me to stop here. If there is any question that you would wish to ask, it's okay. You can always ask in the comment section. I shall always respond. Thank you so much, but don't forget to subscribe, don't forget to share, and don't forget to like this channel. Thank you so much.